Welcome back to MarketSnap's daily market rundown. It was a day of reversals, broken mantras, and a massive AI trade revival that had dip buyers rushing back in. We saw the Nasdaq surge over a full percent, but the real story was the battle between the old guard and the new, with one name in particular breaking its own sacred rule. Let's dive into what moved the needle. The major indexes kicked off the post-holiday week on a positive note. The Dow Jones Industrial Average inched up by 0.3%, closing at a fresh record high of 53,055. The S&P 500 added 0.7% to settle at 7,537. But the real star of the show was the Nasdaq Composite, which surged over 1.1% to close at 2121, powered by a broad-based rebound in technology and semiconductor shares. The VIX, the market's fear gauge, eased back to 15.57, suggesting a bit more calm after last week's rotation. The S&P 500's move today was a clear signal that the sell-off in tech we saw the previous week might have been a bit overdone. Dip buyers stepped in aggressively, and the index is now just a stone's throw away from its all-time highs. The question on everyone's mind is whether this is the start of a sustained rally or just a head fake before the next leg lower. Leading the charge on the large-cap gainers list were the usual suspects in the AI and semiconductor space. Tesla surged nearly 7% on renewed robotaxi optimism and delivery momentum. AMD was up over 6.6%, and Arista Networks jumped over 8%. But the biggest percentage gainer among the large caps was Bloom Energy, which soared nearly 9% on news of an expanded partnership with Brookfield to build out AI power infrastructure. On the flip side, the losers list was a mixed bag. Honeywell Aerospace, trading under the ticker HONAV, was the worst performer, plunging over 10% as the stock continues to adjust to its spin-off from the parent company. AutoZone and O'Reilly Automotive both fell over 6%, suggesting some weakness in the consumer discretionary space. Uber also slipped nearly 3%, continuing its recent downtrend. Zooming out to the weekly performance, the picture is even more dramatic. Axon Enterprise led the pack with a staggering 34% gain over the past 5 days. Cerebras Systems, the AI chip company, was up 26%, and Robinhood Markets surged 21%. It's clear that the momentum is firmly back in the high-growth, high-beta names. The weekly losers list tells a different story. Honeywell International, the parent company, saw its stock drop a massive 50% this week as the market digested its complex split and spin-off. SanDisk, which had ripped over 3,700% in the past year, is now seeing smart money cash out, with the stock falling nearly 20% this week. This is a classic sign of a top in a parabolic move. The biggest headline of the day came from Strategy, formerly known as MicroStrategy. The company, which has been the poster child for corporate Bitcoin accumulation, sold over $200 million worth of the cryptocurrency. This is a massive departure from Michael Saylor's famous "never sell your Bitcoin" mantra. The move was to make payments to shareholders, but it sent shockwaves through the crypto community and caused Bitcoin to dip before recovering. In other corporate news, Microsoft announced it is laying off 4,800 employees, with the majority of cuts coming from its Xbox division. The company's gaming CEO admitted the business is not healthy. This is part of a broader trend we're seeing across big tech, where companies like Meta and Oracle are using layoffs to offset the rising costs of the AI arms race. On the M&A front, Lockheed Martin agreed to acquire Ultra Maritime for $3.45 billion, a move to bolster its undersea warfare capabilities. Also, Apple and Broadcom extended their custom chip partnership through 2031, a massive vote of confidence in Broadcom's ability to deliver next-generation silicon for Apple's product lineup. The macro picture was also in focus. The ISM Services PMI came in at 54, slightly below expectations, but still in expansion territory. This supports the soft landing narrative, but the labor market data is starting to show cracks, with non-farm payrolls coming in weak at just 57,000. The market is now laser-focused on the Fed minutes coming out this week for any clues on the rate path. Looking at sector performance over the past week, it was a tale of two markets. Healthcare was the top-performing sector, up over 6%, followed by communication services and technology, which both bounced back strongly. This rotation suggests that while AI is still the dominant theme, investors are starting to look for value in other areas of the market. The worst performing sector over the week was energy, which is down nearly 1%. Oil prices continue to pull back as Saudi Arabia offers discounts to Asian buyers and the UAE ramps up production after leaving OPEC. This is a tailwind for the broader economy as lower energy costs act like a tax cut for consumers. Looking ahead, earnings season kicks off in earnest this week. We have big banks reporting next week, but this week we'll get results from companies like Constellation Brands, General Mills, and Nike. The market will be watching these reports closely for any signs of consumer weakness or margin pressure. You can find exclusive earnings transcript summaries on MarketSnap to help you cut through the noise and get straight to the key takeaways. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown valuable, make sure to like and subscribe so you never miss a daily recap. And don't forget to check out our exclusive SWOT analyses on the platform to help you build a stronger, more resilient portfolio. See you tomorrow.